Very educative. Thank you, Biju. And now we have Kiran telling us about how to protect yourself, insurance, and what is the need for it. Kiran, please come on.
Yeah, insurance. Why do you need it? I don't look like an insurance agent, but so insurance is basically financial compensation. It's three components. One is financial compensation to either yourself or your dependents. When you have contingencies, it could be death, disease, accident, disability, anything. So depending on what contingency you insure for, you have a variety of insurances. The first three are probably the most important for everybody. The third one specifically for doctors, which is malpractice insurance. And there are a lot of other insurances, property insurance, fire insurance, public liability insurance, and some insurances like car insurance, third party, which are all mandated by law. So we will be discussing only the first three and we'll go into a little depth. We'll start with life insurance. So life insurance, if you go back to the first definition, is a financial compensation to dependents in the event of your untimely death. So all these are very important terms. So when you look at life insurance, you hear a lot of these different plans. And most of the plans that your friendly insurance agent in the former years, they used to be called the LIC uncles. The LIC uncles will promote what are known as endowment plans, ULIPs. They will be couched in different names like kid saving plan, if you have a female child, marriage plan and whatnot. Because the attraction about these plans is that they give you tax-free money at maturity, right? But on the other hand, term insurance will not give you any money at maturity. But the fact of the matter is the only insurance that you actually need in life insurance and the only insurance that can provide any adequate coverage is actually term insurance. But the insurance agents will not sell you this because they hardly get any commission out of this. How much life coverage do you need? You have to think for yourself. If you are the only breadwinner in the family, if you have an untimely death, generally your dependents will require at least 10 to 15 times your annual income plus all the liabilities that you currently have to take care of them, right? So, just imagine your annual income is around 25 lakhs. That means by the earlier calculation, you will require something like 2.5 to 3.75 crores as a lump sum amount of money to be paid to your dependent in the event of your untimely death. Let's look at this example. 40-year-old, healthy, non-smoker, assuming it's a doctor, coverage required according to the previous calculation is around 3 crores. And you are using this term insurance till 65 years of age, right? So if it's a term insurance, your annual premium will be around 50,000. So if you pay 50,000 per year from 40 years to 65 years, in the event of your death, your dependents will get a coverage of 3 crores. Now, for the same premium, if you are using an endowment plan or a ULIP plan, you will be getting a coverage of 5 lakhs. Just think of this. Because here the attraction is not the fact that you will only get 5 lakhs, it's just that you will get a lump sum after 65, right? But it is basically an investment plan. The endowments and the ULIPs which are generally sold to you are investment plans. They are not insurance plans in its pure sense. If you want to cover your dependents, you should take a term insurance where your dependents will get paid a lump sum amount of money at a relatively low premium for the amount of coverage required. But because these relative premiums are very low, there is hardly any commission. Insurance agents will not tell you this. How long should you take term insurance for? It's very simple. Until you have dependents or until you have accumulated a corpus large enough to take care of your dependents. Typically, let's say 60 or 65 years. There are some term plans that are being sold currently till 99 years of age. It is ridiculous. Don't take it. I have a huge corpus already. Do I still need life insurance? No. Let's say my annual income is 25 lakhs and currently have a nest of 50 crores, whether it is part of my investment or what I have received from my parents, that is good enough to take care of my family. I don't need any life insurance. Now, coming to health insurance. Again, financial compensation to yourself or your family, that will depend on what kind of health insurance you take. If you take individual plan, it is for yourself. If you take what is known as a floater plan that covers all the members of the family, it's for your family. It is for hospitalization and daycare. So this is again a basic principle. In health insurance, always try to take what is known as a base plan plus a super top-up plan. Okay, so I will explain with an example. 40-year-old non-smoker, no systemic illness or PED is pre-existing disease. This is insurance speak, PED. So we need a health cover of suppose say 50 lakhs, and that sounds a lot of money, but if you get admitted in the ICU for a few days, lakhs will just flow away like that. And here there are two options if you want a coverage of 50 lakhs. Or you can either take a base plan of 50 lakhs. You take a single plan that covers you for 50 lakhs. That will be approximately around 40,000 premium per year. Or you can take a base plan of 10 lakhs and a super top-up plan of 50 lakhs. Which what it basically means is that if you get hospitalized and the total bills say come to around 20 lakhs, the base plan will pay out the 10 lakhs. The super top-up plan will kick in only after your base plan is exhausted. And because in terms of probability, the chance that a hospitalization is going to cost you more than 10 lakhs is very less. And there are very less chances of super top-up plans kicking in. Therefore, the premium is actually much lesser. For essentially, for a coverage of 50 lakhs, you will have to end up paying a much lesser premium as I have shown there when you use this in combination. Generally opt for plans with no sublimits on room rent or ICU, even if it is at a slightly higher premium. I've seen and various examples where you can, for example, develop a heart attack at a time when there is a dengue outbreak and there are no beds available except the suite rooms or the deluxe rooms. And then you don't want to get into a hassle of having a plan with room rent limits, ICU sublimits, etc. Just even if it is a slightly higher premium, opt for such a plan. Important to check the policy coverage of prime hospitals in your locality, in the sense that you shouldn't take one insurance which gives a lower premium simply because it's a lower premium. You have to make sure that all the major hospitals are covered in their network. This is important because the only way you can get cashless claim is only in the network hospitals, right? And this is important if you have a large expense. Now finally, there are so many other things, we'll just stick to only the basics. Finally, malpractice insurance is also called as professional indemnity insurance. It's basically financial compensation if the court awards a financial compensation and the legal expenses, which is the amount of money involved, it is paid to you when a court finds you deficient in your professional service. Right? So malpractice insurance or professional indemnity insurance is essentially offered by one insurance companies, mostly private insurance companies, but it's also offered by the Indian Medical Association, which is called the PPS or the Professional Protection Scheme. The Professional Protection Scheme technically is not really an indemnity insurance. It's a more comprehensive insurance. It generally has a lot more advantages than the insurance that is given by the private insurance companies. So they are much more experienced, have a vast data bank. They have lawyers who have been doing this for a long period of time compared to the private insurance companies. And well, in private insurance companies, a lot of time you have to find the lawyer yourself and you basically deal with yourself and the legal team. That's not the case with PPS. And PPS also usually with exceptional circumstances only, they allow for any payoffs or settlements. And also, depending on the high-risk category, you don't have to pay extra fee. For example, if you are an ophthalmologist compared to somebody who is not in a surgical field, you might have to pay higher premium with private insurance companies. If you are a gynecologist, you will have to pay a very high premium. Or if you have a claim this year, you will have to, the premium will get loaded much higher next year. That is not the case with PPS. So, eligibility, only the life members of Indian Medical Association can be part of PP scheme. The scheme covers all cases filed in all these different formats. It's also important to note that if you have a medical legal case against you, if the opposite lawyer knows very well, he will file case again in all the courts, criminal court, civil court, human rights commission, consumer court, everywhere. So you will need to fight in all these areas, and that's what PP scheme does. As far as the jurisdiction is concerned, the traditional PP scheme is only in jurisdiction is within Kerala, but there is also a national PP scheme which will cover throughout India. And this is essentially the fee structure. It comes to around 1,500 by year 6, and that is how. This will cover about 10 lakhs per case or 20 lakhs per year. And in some cases, we know that this is not enough. You can take what is known as an enhanced protection, where for an extra 10,000 per year, you can get coverage up to 1 crore. For the professional protection scheme, with national PPS, it will cover only up to 50 lakhs. So some general principles before I conclude. you keep your family members informed. It's not enough that you take a huge coverage of life insurance. You have to keep your family members informed of not only the policy documents, if possible, if your dependents are financially illiterate, get them a list of fee-only SEBI-registered financial planners. You can get it. Fee-only SEBI-registered financial planners. Because once you get a lump sum of 5 crores, they need to know what to do with it. Full disclosure at the time of taking insurance. Do not hide any pre-existing diseases or anything. You will end up in trouble later on. Insurance is never a substitute for investment. You should not club both of these. That is why you take term insurance and do your investment options in other mechanisms. And keep it as simple as possible. You will have, whatever insurance you take, you have so many riders, critical illness riders, terminal illness riders, and that benefit, this benefit. Usually all of them are market speak. Keep it as simple as possible. Thank you.
Thank you, Kiran. That was